Yeah. Welcome to the Trading Pit, your virtual gathering for all traders. And man, we've got an exciting show today. On our last episode, we expected a pullback in the market, and that's exactly what we got. Bitcoin's now trading at about 41,000. Ethereum sunk below 2,200. On today's show, we're going to be unpacking the data driving the market, asking where we're headed next, and trying to find a few trade ideas. I'm your host, Marconi White. And today I'm joined by two of my favorite analysts. I got JJ and Ray. They're so great, they don't even need last names. I love these guys. All right, JJ, I'm going to kick it off with you. Tell me, what is the mood of the market?
Board. Chop consolidation for now, at least. We have some major headwinds coming up this week, obviously, like FOMC tomorrow. But as we mentioned last week, FOMOing here at the top would have been disastrous after that big short squeeze. So we saw some mean reversion back immediately after CME opened. That led to a bunch of longs getting liquidated here. So as we saw it kind of fall down to the low 40,000s, I believe, 40,200 or so it hit. And we saw about 60 million of longs wiped out. Open interest took a tumble. Just exactly what we were saying last week. Tons of profit taking there.
Well, that was one of the things we talked about, right, on the last show. It was the shorts that were getting liquidated. This time it looks like a little bit too many people were eager to try and make that max long and really take profit at the wrong time.
Yeah, anytime you see these kind of huge, like even if you just bought this bounce here, like you kind of want to fade these moves where people are forced to buy or sell. Last week we saw, pull this up, so you saw the short liquidations here. And then if you would have sold it this time, you would have been sitting pretty now. You could have bought some back at lower prices. And here, obviously, if you would have bought that bottom wick, you would have been able to ride that nice quick bounce back up to the 42,500 range or so. And now we're just kind of meddling in the middle here, waiting for the verdict to come from Powell tomorrow. As we were discussing last week, there's lots of options open interest still. It seems like people are selling the upside into the end of the year. So if we look at this chart of options open interest here, we see the 40,000 strike. This is kind of our support level. There's some open calls here. So people are protecting that to the end of the year, and what they're doing to hedge, they're selling these strikes, the 42,000, 43,000, 44,000, and 45,000. These are likely dated towards the end of December. So if price expires, say below 42,000 or below 45,000 in general, these will expire mostly worthless. They'll collect that premium, and then they could probably add to these long positions here at 50,000, which are going to be longer dated towards, say, the end of January, March, etc., to kind of catch the potential for a blow off into the ETF announcement news. But as of now, like, this is our resistance levels. So anywhere where you see people selling the upside on options, that means they're probably backing it with spot. And if price continues to appreciate, I mean, we'd have to get above 45,000 probably to really see a big squeeze towards 50,000. Just seems like volatility compression for now. Market's kind of settling in, trying to find a new range and turn 40,000 into support. Hopefully that's what we'd like to see.
So any concerns here, or is there anything, I mean, you just mentioned a bunch of movement in the 40 to 45K range, but is there anything below that that's suggesting that some market maker is trying to pull us down? Because I know we've talked about that even on the last episode, just the juiciness of getting more people into the market and then be able to tank it to take out some exit liquidity.
I think that's what we saw. We saw them kind of force people to go long last week. There was a lot of FOMO in the air. Obviously, people were expecting 50K into the end of the year, and then we saw that all those dreams come crashing down on Sunday night when CME futures opened. There was actually a nice tweet about this by Split Capital. CME futures puked about 10K BTC, or $44 million worth, basically as soon as the futures opened on Sunday. And that's what really caused this liquidation candle down. They took profit on those positions. They haven't rolled that exposure forward to January yet. I think probably what they would like to see is some consolidation here. Maybe if 40K becomes support, possibly get some bullish catalysts from Powell tomorrow at FOMC, etc. Then we could see kind of that 40,000 range become support. They would open up January contracts and roll their exposure forward. Like we mentioned last week, the CME premium, which I'll pull up here. Last week, I believe this was trading around $1,000 premium, which means if you were going long on the CME, you were paying, at the time, it was like 45,000 for a Bitcoin. Now it's back down to roughly par with Bitcoin. So if they're going to roll that exposure forward, they're not going to have to pay such a high premium to get that January exposure now as they would have if they sold it Sunday night and immediately bought it right back. Now they can kind of do so at par without paying that extreme premium. I think they're probably waiting to see what happens over the next course of a couple days to see if 40K is in fact support, or if this was just a massive short squeeze and we revert back to the mid 30Ks or so.
Okay. So from a spot and from an options perspective, it looks like we're kind of range bound for the time being. As you're saying, it sounds like the market makers are really trying to see what the market's willing to test, if they're willing to sort of sustain this 40K level.
Yeah, there's always going to be volatility on FOMC days. It's kind of the nature of the beast there. So I imagine they'll let that play itself out, see where price kind of settles towards the end of the day, end of the week. And then I would imagine they'll probably be, if they are looking to roll that exposure forward, we'll probably see it towards the tail end of the week. We'll see some inflows into those futures products again and possibly be set up for another leg up. But that all obviously depends on how Powell's tone is, right? Like he could say the wrong thing or sniff in a weird way and the market might make a weird move. So you just have to see how that goes.
Yeah, trying to read the tea leaves. So you just walked us through from a spot and an options perspective, and I know you just mentioned the perps being flushed out for those who are going long. What's your perspective there on? Are they also suggesting that we're kind of going to be sitting in a range for a while, or are they giving a different signal?
Open interest has fallen a bit. There's not a whole lot of activity going on now. Like we saw that big liquidation. People are kind of getting chopped in this range. It seems it went back up to 42.5, now back down to towards the range lows around 40,500 or so. And we're just chopping back and forth. The market's kind of taking liquidity. What we do see in the spot market, those whale wallets I touched on last week. Let me pull up this chart. We see they're continuing to buy. So this is just red. This is indicating small wallets selling, large wallets buying. And this has continued even after the drop from 44,000 or so. They're still happy to buy. So that's kind of a good sign for continued price appreciation up over the course of the next few months, not necessarily tomorrow, but it's a good sign that the market is digesting this and it's actually being supported by spot buyers rather than just, if we were to see open interest get extremely elevated, right again, that would be bearish. We don't see that now. What we see is open interest just consolidating, chopping back and forth. So I think that's a good sign for continuation, but obviously the macro has to play along and we need those CME futures to get back bullish again at some point here.
Okay. So what I'm seeing there is, as you just said, we've kind of wiped out or washed out the open interest, but we're still seeing the whales buy. And this is something that over the last year we've been talking about on our previous show, Alpha Bytes. I think you've commented on the fact going back all the way to November, we were seeing those whales come in, and outside maybe a little bit over the summertime, and I may have the time frame a little bit off. For the most part, we've seen those whales continue to accumulate, right?
Yeah, I have the chart here. So basically, since we hit 30K in April, you see all these red dots here, these red channels. It's just been persistent accumulation, which leads me to believe that it's kind of the start of a larger move, similar to as we saw here in late 2020, when whales were just buying at any price possible. Every dip was basically bought in those circumstances, and we see that again here. So no reason to believe they're not the most intelligent players in the market this go around. We'll see if that works out, but it lends itself bullish, right? We saw this accumulation at the time. Bitcoin was trading over 30,000. It didn't make any sense. It seemed like they were buying the top, especially after we dropped back to 24,000. Then look, a few months later, we're back above 44,000. So
yeah,
smart to bet with them until that trend changes definitively. No reason to believe they're wrong this time. That doesn't mean go out and 100x leverage yourself, but it means you should be looking for these opportunities when you have these large liquidations happen. That's a good a spot as any to buy some spot, right? Because these people don't want to sell, but they're being forced out of their positions and being forced to sell at low prices, which you could take advantage of.
Yeah. So what I'm taking from this is that the smart money, as you said, the whales, they're looking at accumulating those spot positions, maybe doing some options right now where they can get a little bit of premium out of the market, and they're staying away from the perps, right? And that's going to be where maybe we're seeing a little bit more of those degens. And the smart degens are going to be waiting and doing exactly what you're saying, which is actually getting some spot, kind of riding in the wake of those whales that are showing exactly sort of a footprint of what to follow.
Yeah, that's really the smartest thing you can do, is just accumulate spot in these circumstances here. If you're savvy enough to play options, go for that. But right now it seems like they're selling the upside premium, at least into the end of the year. So don't expect a whole lot of wild appreciation to continue on. I mean, there's still the outside chance that tomorrow is way more bullish than the market expects, and that brings us into a blow off top. What I
Mm-hmm.
really think we need to see now is kind of we want to attract some short interest, and that's what I think market makers would like to do is attract short interest in this 40,000 to 44,000 range, have people confidently short it, and that would ultimately provide the fuel for another short squeeze higher up to 50,000 or so. But no signs of that yet, so I don't think that's on the horizon in the near term, say next week or so at least.
Yeah, well, I've got a bunch of questions here. One of them is going to be around the Dixie that I want to get to, and definitely I want to be talking about as we start to see this market right now. Are there some additional trades beyond buying spot? But before I do that, Ray, I'm curious. Do you agree with the mood of the market being a little bit bored? And as you see some of the data coming from JJ, what's your take on that?
I think the market's taking a much needed break. It got pretty hot. Things got very euphoric in the altcoin markets and also with Bitcoin. And this is what Bitcoin does. So it goes up a bunch in a short time, and then late spot and margin longs pile in. They get liquidated, price pulls back a little bit, and it consolidates. So I think the benefit of looking at options market positioning is it gives you some idea of what range big players are looking at. And then via TA, you can kind of get further clarity on potential price moves and the potential like positive and negative catalysts behind them. So what stood out to me as price dropped on Sunday evening is that it stopped at the 20-day moving average on the daily chart, which is always good in every single bull market or sustained bullish uptrend. Crypto assets tend to ride along that 20 MA, right? So the first thing we're always looking for is some sort of like convergence between the 20 and the 50, or the 50 and the 200. That's all happened before. After that's happened, then on the daily timeframes, you want to see the price continue to trade and retest the 20 MA, bounce from that and move higher. So that's one thing that happened. Price stopped right there and rebounded. Now we do see it selling off a little bit today. So below that, I think a potential possible juicy buy the dip target might be 38.5K, which is about $1,000 above the 50 MA. But if you're a retail investor, you're Bitcoin poor, and you're waiting for like that 40K drop or that sub 40K drop, it's possible sentiment and flow could change in like 1, 2, or 3 days unexpectedly. And then these are the investors that get left behind, right? So I think like leading into the rejection near 45K, there were signs that the market was getting overheated. One, altcoins were doing double-digit runs, some of them triple digits. They were moving in tandem, so BTC dominance was rising, Ethereum dominance, Ethereum itself was rising, altcoins were continuing to rise, and price was getting real sticky at that 45K zone. It couldn't get through that. The daily RSI on Bitcoin was above 83, which is hot. The funding rate was high, and there were iceberg orders on the books. So when you go look at the aggregate order book, you would see these buy walls underneath Bitcoin price moving up, up, up. So they started at 38K. I'm talking about 300 to like 800 Bitcoin, buy orders or bids on the books. And then it moved up to 40K. Then it moved up to 41K. Price continued to move higher, higher, higher. Then these buy walls moved up to 43.5K, right? And Bitcoin was still struggling to crack that 45K target. It couldn't push through it. And what I saw happening is that these iceberg orders were luring high leverage traders into being enticed on what lay beyond 45K. If 45K is broken, it's likely that we run up to 48K, 50, 55K. Everybody wants to capture that upside. And with these orders constantly moving up, these big buy walls moving up underneath price at what we thought was key support, it leads traders to assume that these large bids are going to act as support if there's some sort of pullback. And what we saw is those bids disappeared. They either got filled on the way down, right? Or they got pulled and price fell all the way down to the 20 MA. And here we are consolidating. So, as a retail trader with some years in the game, this is a good consolidation time. It's a good time for Bitcoin to cool off. as Ben pointed out and JLabs Digital pointed out, altcoin funding rates were also getting quite frothy and euphoric. And these are always signs that, people are using leverage a little bit too excitedly, and that the market's reaching a state where it's like, how much higher can it go? Especially if Bitcoin, if most of the market is following the narrative of there's possibly an ETF approval coming, but also if Bitcoin can clear 45K, we might run up to 48. If that's the primary accelerant of altcoins gaining, then the high funding rates and Bitcoin not pushing through 45K was kind of a warning sign to me.
Well, if I can go back to your chart, I want to point out something. I don't know how your browser stays open with all this data and all those tabs open. I think that's a Guinness Book world record number of tabs open. And so I just want to do a hat tip off to that.
Hey, I've got 3 windows with that many tabs open right now.
You're running a
office
computer
power
somewhere.
It's going to be mass blackouts in Ray's neighborhood.
That's exactly right. Yeah. The neighbors may be complaining. Okay, so just to summarize a couple of key points there, because I know we have a question in the chat coming in around ETF approval. So I want to get to that as well as talking to Dixie, and then we can talk about some other trades. So you're saying really it's good to see that Bitcoin bounced off the 20-day, but what you're seeing, it sounds a little bit like the market engineering some liquidity with the real high speculative traders jumping in at points when they saw those buy walls, which really can just be, the market sort of, I don't want to use the word manipulation necessarily, but I mean, it really could be a way to try and entice people when you're saying that really isn't a good support level necessarily.
Call it what it is. That's manipulation. It's the name of the game.
I think it's information and people digest it how they see fit. So what motivates a person to enter a trade, the reasons behind that are going to vary. But in short, sure, there is a narrative that all the options guys are talking about 45K. We rolled over our 40 and 41K strikes out to 45K. And you got Deribit putting out literature about how 45K, that being broken, is going to be an accelerant for price, how people are putting strikes further out into the 50K range, into the 60K range. There's all the James Sefayart from Bloomberg putting out these tweets daily with a chart of Bloomberg 90% approval of spot ETF and updating you on all the minutia of who's fixing their ETF form and S1 form, blah, 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 blah. So sure, there's a lot of kind of hopium out there that could entice somebody to be a late long, whether it be spot or in the perpetual market also. And as JJ pointed out, when you look at a liquidation map, because JJ said that, market makers may try to incentivize people to go short around 40K and then pump them out. Well, when you look at liquidation maps, you can also see that there's a lot of short interest, right? There's a lot of longs that can still get stopped out. So I think, from the kind of vantage of trading a chart and price chasing after where the liquidity is, we've kind of exhausted the upside liquidity up to that 45K range. We didn't get there, to put it like that. And there's a lot of bids at 40K, below 40K. There's people that want to buy there. But there's also a good amount of people who are leveraged long from 41K further out. So I guess the market possibly may explore some of that downside liquidity.
Well, yeah, and like these consolidating markets just becomes, those liquidation pools become magnets in both directions.
Yeah, exactly.
Back and forth. And they just soak up all that liquidity until one side or the other becomes so offsides that it can exasperate a larger move outside of the range. So I think that's what we're seeing now, is just like waiting to see who overplays their hand in this range, and then we'll see kind of a break towards, say, 36K or a move up towards 45K again. But
yeah, it's healthy. This is where you make money. So if you're not the type of trader that plays breakouts and then plays the momentum and like straps on money or leverage as price breaks higher, I don't trade like that, because I always get freaked out about the pullback and getting liquidated and whatnot. It's range bound, predictable price action where you can just accumulate Bitcoin easily by playing that range. So the actual bull market trend is not broken. We've still got you know, the uptrend is intact. We haven't made a lower high at
Well,
all.
Ray, let me jump in here. I've got a question from the chat. It's asking if we can look on the channel. Let me get this. This comes from Saltma, maybe. I apologize if I got the name wrong, but it says, can we look at the channel on the daily? Do we think Bitcoin will go back into the channel on the log chart? So I'm not sure if someone has that chart they could pull up. I think they're looking for the daily log chart and asking if we're in or out of that channel. I'm not sure if you guys have something there. You could
I
add
have
some
an
perspective.
idea of what he's talking about. Maybe he's talking about like a parallel channel like this, where price was trading in and out of this parallel channel. He's probably
Okay.
wondering, are we going to enter into that and touch the channel midline or drop all the way down to the 20-day moving average? So that's a weekly chart here, if that's
Yep.
the channel that he's
Yep.
talking about, even though this isn't a log chart. And then here it is on the daily time frame. So we've already touched the 20. Some people will look at the Bollinger Bands and kind of use that as guidance. So, you know, if price loses the 20 MA, is it going to drop all the way to the channel midline or to the lower arm of the Bollinger Band at 35.1K? I don't
Yeah.
know. You know, it's hard to say what is the catalyst of downside price action, because with the ETF so close, or approval or denial, to me, it seems a lot of Bitcoin's kind of daily and intraday price action is hinged on that. And the external price catalyst, like Fed monetary policy, interest rate hikes, regulation, like that's all kind of cast to the wayside because everybody's focused on the more crypto-centric factors. So I think right now it's a little bit difficult to kind of like make an educated guess on what might be a catalyst that sends Bitcoin
Right.
back into this channel
Well, that's,
beyond a
yeah.
liquidation event.
I was going to say, what I'm hearing from you guys is this is a time for consolidation. This is a time where a lot of traders are going to get taken out, and it's going to be eaten up. And this is a time you don't want to be trading too much because you can become exit liquidity. So buying spot potentially. And I know we're going to get into, you know, are there some potential trades in a moment? But I want to come back to the ETF question because I think that that's going to be on a lot of people's minds. And we had one in the chat. I'm going to read it verbatim. It says, do we think the ETF approval first week of January, as is estimated, will be a sell the news event? What happens after?
I think that really depends on what kind of price action we see into it. Like if Bitcoin is down at, say, it goes back to the lower end of this Bollinger Band here on the chart I have, goes back to the 35,000 range, or even if it's trading around 37, if it's well below the highs of December, right? Then obviously if we get the approval, I think it would just race back to those highs, make higher highs, and go towards 50K. But if the market front runs that and we're already above 50K and the ETF comes out, then in that case, it's most likely maybe we get a short-term pop and then it just fades back towards the 40,000 range at that point. But it's kind of path dependent based on where we are when that news comes out. Because if price is already making new highs, then you can assume it's already priced in, right? People are front running it. Insiders had that information ahead of hand. If it's fading down, then that means the market doesn't think it'll happen. There's probably a lot of short interest in that scenario, in which case it would provide the fuel needed for a squeeze higher.
I think it's irrelevant, to be honest. It depends on what is your ultimate goal. Are you purely trading the ETF news and not holding a lot of spot Bitcoin, or are you someone that wants to hold Bitcoin for the next couple of years because you believe it's going to hit six figures and higher? So another thing to think about is, like, are you trading all of your trading capital, and by staying long in Bitcoin post ETF, that puts your hands behind your back and sidelines you if price goes up or price goes down? Or are you using principle and like building basically low cost Bitcoins by trading momentum and leaving the profits in Bitcoin? So I think those are things that should kind of impact your how you react to the ETF news. You know, if price breaks out, we have some idea on where price could break out if an ETF is approved. Maybe it goes to 60K, right? Maybe it wicks up to 60, 65K, take some profit there, or leave your Bitcoin profits long and pull your principal, and then assume that there might be a retest, right? And maybe price is going to retest back to 50K zone, back to 48K as support, just looking at Bitcoin's market structure. If you like futures, maybe you open up a light short. So take, $500 or $1,000 or whatever you're trading with, a small percentage of your capital, and open a short at what you think that top is. If you think it's going to be a sell the news event, that way you're kind of hedged and you're making money off the downside that comes in the interim, right? So I think, having multiple plans prepared in advance for what potential outcomes exist post ETF approval or post ETF denial, it just gives you that optionality and allows you to be nimble so that you're not thinking as it happens. You've already got those plans mapped out and you're ready to act upon them as either A, B, or C occurs.
Acting nimble seems to be part of the trader's mindset, or at least the ones that's going to be profitable, is really taking what the market gives you rather than trying to chase returns. We did have another question that was in there. Says Coinbase insiders are selling Coinbase stock. They might know that ETF is not getting approved. What do you guys think of all the coin sells from ARK and even Fred E, which I'm not sure what exactly Fred E is, but okay,
I know JJ said they're going to use it to seed their own ETF. They're going to use the profits from that to kind of seed and inject money into their...
I think the official narrative I read was that it had become outsized in the portfolio, so they were rebalancing, which I think is kind of a catch-all, right? You can hear that, and that doesn't necessarily need to be true. But you're saying some of the news maybe that they're using some of that capital for an ETF.
Yeah, it's up 1,000,000% this year, So if you you have to realize how large these people's positions were. And when something moves up as much as Coinbase has, it's like anything else. Like you have to.
Yeah, they're obligated to take some profit.
Yeah, you got to de-risk it at some point. There was a large gamma squeeze towards the tail end of last week on Coinbase that I believe sent it over 150 or so.
150, yeah.
Better
I think
time
it's
to take
beautiful. Like it kind of ignore what other people do to some extent, because think about Coinbase's business model, think about their revenue model, think about them being the thoroughfare of Bitcoin being purchased and then placed into an ETF. Think about them being the custodian of that. Think about Base. Think about how NFT markets are going to continue to grow. They've got a perpetual futures exchange overseas. They've got futures in the States. They're got primary market share now that Binance is almost gone and Kraken is kind of like known for scam wicks and not really the retail trader's first destination. So, thinking about Coinbase in the long game over the next year or two, especially if an ETF is approved and Bitcoin goes to 6 figures, what impact is that going to have as direct beta on coin price? So sure, maybe they're selling now, and that might be a buying opportunity for retail investors because the chart suggests, that coin could go up to 220, just looking at basic charts and basic TA. And then when you think about their business model and then start to look into all the other stuff like price to earnings and all that other stuff, I think there's a compelling case there for that being a good long investment, regardless of if Cathie Wood is selling.
If you use insiders as a track too, like typically you find they don't have the best hit rate in terms of buys and sells. It's just kind of like a lot of times they get assigned options and they have to pay taxes on that next year. So obviously you have to sell some to cover your liabilities. It's there's times when it can be a red flag. I don't necessarily think this is one of those. It's kind of like they probably saw, hey, look how extended Bitcoin is. Obviously, Coinbase is a proxy trade for Bitcoin. It's gone up 1,000,000%. You have to take some profits at some point. What better time than in the middle of a gamma squeeze?
Okay. So I think the message I would have for anybody listening here is that we've got a period of chop. You do not want to become exit liquidity. There's questions about the ETF. We hear two different perspectives there. Path dependent coming from JJ about how you should be sort of looking where you think the market's going to move based on how well Bitcoin's performed prior to that. And then Ray putting out the perspective, which is more about having options and plans, sort of being nimble on your feet. So I think that's kind of a good way to be thinking about this. I want to talk a little bit, JJ, about the Dixie. And then I want to spend some time asking you guys, reviewing some of the trades that we talked about last week, as well as maybe some ideas you guys may have now. So, I mean, whenever we talk about the crypto markets, everything we've talked about today has really been very centric on what's happening within crypto, but we know we're part of a bigger world, right? So, JJ, from a Dixie perspective, are there any warning signs or perhaps even additional fuel for the crypto market based on what the Dixie's doing?
Yeah, so last week we were discussing this resistance line here, the
Mhm.
50 RSI resistance on the weekly, or I'm sorry, the daily, as well as the weekly. It was up against it there as well. It failed at both spots, made a strong run though. Obviously, that kind of, I think people were going risk off into this morning's CPI report. So that's kind of a natural effect is when people take profit, they take profit into dollars, strengthens the dollar ultimately, right? So we saw it run up, hit that resistance level almost perfectly on both these charts and faded twice. So here was last week and again yesterday. It's pulling back again now, but man, this chart's just been resilient. So it really depends on what Powell has to say tomorrow. Obviously, the
Papa Powell, please give us some information. Oh my
you
gosh.
don't have to like it, but that's kind of the
Yeah.
name of the game, unfortunately. So we have to sit around and wait what he has to say. It doesn't look, I think it would have broken out if it was going to be anything extremely hawkish. That doesn't mean a surprise couldn't come and we could see a breakout higher. It's still trending above. Yeah, it is still trending above the 200-day moving average, which is currently 103.55. So it's consolidating here. It has been for about the past 3 or 4 weeks. So just kind of waiting on some decision here. I think if we fall lower, that could open up, like say it drops back down below the November lows around 102 tomorrow. If Powell comes out and he's extremely dovish, we could see this fall off. That would open the gates for Bitcoin to make a run back towards the highs. Obviously, if it moves up, then we could see those 36K, 34K Bitcoin targets come back into play. But right now, it's still consolidating. Waiting to see if these resistance levels here can break on the daily and weekly RSI timeframes. That 50 RSI mark seems pretty pivotal. As we see, like when it reconquers it, this is what leads to these massive uptrends in DXY. And if it fails, then obviously it's going to lose momentum, probably fade back down to below 100. And that would really set the stage for a mega 2024 for Bitcoin. But it all hinges on tomorrow.
Everything hinges on what Papa Powell says in a meeting tomorrow.
Yeah. Here's the federal funds futures.
Yep.
So these are priced inverse. So when it's at 100, that means that the federal funds are pricing in a 0% federal funds rate. Right now, that's at 95.3. The current federal funds rate is, I believe, 5.5%, 5.2%, something around that. So these are priced. This is September. It's currently showing us that the market expects the federal funds rate to be about 4.65% or so come September. So that's about a full basis point cut that's currently priced in. Either it's tomorrow, Powell will confirm that, and we'll see these move higher, which will result in a weaker dollar, or these will drop lower, indicating a higher federal funds rate, which will strengthen the dollar and probably lead to it breaking out above this 50 RSI mark, in which case Bitcoin would go risk off, in my opinion.
Risk off. What is your take, JJ, on sort of the herd mentality of the market? I think Ben Lilly shared a tweet, and I don't have it in front of me, but it was showing some ridiculous number of people, almost 100% of the market, when surveyed, was expecting a rate cut. That seems crazy to me in the sense that, I mean, if everyone's expecting something to happen, then it doesn't necessarily happen. It's not like the sun rising. I mean, we just saw the CPI print come out this morning. I think, other numbers I need to have.
0% month over month, around 3% year over year.
Okay.
I think that's probably close enough to their targets. Like, are we ever going to get back to 2% inflation after what happened in 2020? I wouldn't bet on it unless there's some kind of severe deflationary event, which is in nobody's best interest. Because we know the response to that is telegraphed, and it's ultimately more inflation in the long run, right? So I don't think they want to get to that scenario where we have to deal with actual 2% inflation, the consequences that would bring. I don't know, though. I'm not a macro expert, but I kind of trust the market's wisdom on this. They've been right pretty consistently. So you see basically throughout the second half of 2021, when interest rates were zero, these started pricing in rate hikes pretty drastically throughout the year, right? So we saw these federal funds futures dropping, which indicates higher rates, and they were spot on. And now since September, we've seen them rising, which indicates that the market's expecting interest rates to drop. So I think you trust the market's wisdom on this. Like, these traders have access to the people that trade federal funds futures have access to way more information than we can comprehend, data points, etc. Probably even more so than the Fed, believe it or not. So I would actually rely on the market's wisdom in this. We'll see what Powell has to say tomorrow, but everything's pointing towards rate hikes. And there's nothing in like if inflation is low enough.
Sorry, did you say rate hikes or rate reductions?
I'm sorry, rate reductions, rate cuts.
Right. Okay.
It's not in the Fed's best interest to cause a deflationary crash, right?
Right.
Their long-term mission is employment and price stability. If inflation's low enough, that's price stability. And they've shown that they can get inflation down if it gets too high, as it did in 2022, without too much pain. Obviously, there was pain in crypto markets, but the wider economy didn't experience that. So
I don't want to,
you know. So I think,
I don't want to just, you know, normalize or not consider all the pain people felt that were in crypto. I mean, we went through a lot. It was emotional over the last year. Let's not downplay that, JJ.
Yeah, well, that's the price you pay for the wild gains. Is you have to deal with the downside. You gotta strap in sometimes.
So I just want to. Yeah, no, sorry.
Interest rates are already so high, right? Like,
yeah,
this is a normal level for interest rates to be at 5% plus. Not necessarily sustainable long term. So I think it's probably in their best interest to begin signaling cuts further.
Okay.
Not necessarily we're going back to 0% interest rates, but back down to a normal level where you can keep a healthy humming economy and whatnot. So we'll see.
So just to summarize here, when we look at spot, we still see Wells buying. When we look at the futures market, those look like they're cooling off. When we look at the options market, it looks like it's a structure set up to do some chop, if you will, or some consolidation. You guys are looking at sort of this being a time to, if you're interested in making some buys, spot is probably a good thing to be looking at. And this is just a dangerous time to be doing some trades. So I want to just transition over to that and ask you guys, you know, are you looking at some specific trades? Now, before we do that, I want to bring up last week on Thursday, we talked about the ETH BTC trade, both just buying ETH as spot as well as the ETH, the grayscale ETH, because there was a bit of a discount. So JJ, I want to start with you. From your perspective, is that still a trade that's looking interest to you, or are you going to just take a little bit of a breather now based on what we just saw with the market?
I don't think right now is necessarily a time to be jumping in. I think we would kind of at least wait for the end of the week, right? See how things shake themselves out. Like we were talking about with the dollar. Like if this rips up higher, you don't want to be stuck in a long altcoin position that just gets your face melted off into the end of the year. There'll be time for entry. Like look at ETH's pullback. So it was over 2,400, pulled back to 21,800.
Mm-hmm.
You're not going to be buying the top most likely this week, right? Or worst case scenario, you could buy if it reclaims that 2,400, and you'd be no worse off than you had bought last week. But you can wait for that to play out. If Bitcoin consolidates, that typically tends to be bullish ETH. Deribit made a nice thread here earlier this week, just showing the positioning of the options market. Let me know if you could see this chart here.
Yeah, no, it's on
ETH active positioning.
Mm-hmm.
So where you see red, that shows sold calls. So these are likely shorter dated, probably the end of December or so. And these are people harvesting the yield there, selling these call positions. The blue is where people are outright buying them. So these are probably dated for January or later. So if price were to get back over this 2,400 level, especially if it gets above 2,500, we could see kind of a gamma squeeze situation come into play here as these strikes get in the money and the people who sold them are forced to hedge if they haven't already. And we could see price make a run up to 2,800 or so. That would likely come as a result of Bitcoin consolidating towards the higher end of its range. So say Bitcoin kind of chills between 43,000 and 45,000, has some bullish consolidation there without too much futures positioning. Then ETH could really take off, make this move higher. We'd see the ETH BTC ratio start to rise, and ETH would finally have its long-awaited breakout.
Okay.
Whether or not that happens this year, don't really have a read one way or the other, at least this week. I reckon we'll know towards the end of this week, though. We'll have some insight on that. But it is a good trade to keep your eye on. If things continue to consolidate in a bullish pattern here, he starts to break out on the ETH BTC chart. Look for it to make a outsized run compared to Bitcoin. But I wouldn't rush into that just yet. Let Powell speak tomorrow and see where we stand then.
Okay, so still an interesting trade. Still looking at the grayscale trust, but pausing a little bit. Not needing to
still a great trade, by the way. Like your downside is so limited on this. Not limited, but you're buying it at a discount already, right? So this is probably priced around 1,700 per ETH or so, as opposed to 21,800 or 21,080. or I'm sorry, 2,180, not 21,000. I'm used to Bitcoin prices there.
Getting excited there.
But with the ETH Grayscale Trust, you're basically buying it at, a 20% discount or so, and you can hedge it with ETH futures, protect your downside. And then obviously if an ETH ETF is approved, we'd see this reach par, and then it would probably go back up to, 3,500 or so, and this would be trading in the 30s. So you could get a nice double there in 2024, I think.
Okay. Well, Ray, what about you? What trades, if any, are you looking at? Because I know you kind of cautioned everybody to not jump into anything right now, especially in the chop, but is there something that's kind of caught your eye?
I like what's happening in the AVAX ecosystem. So, narratives and themes tend to drive crypto trades, especially in the altcoin market. And the theme of the last 2 weeks were in-profit traders rolling out of Bitcoin, possibly into Ethereum. And we saw that actually happen, and Ethereum push through that 2K level, push through that 2,300 resistance, push all the way nearly to 2,500, and then the whole market kind of unwound. And JJ just explained how ETH still looks like a good investment over the longer term, which I totally agree with. So beyond that, altcoins are still ripping and running. They were a little bit red yesterday, but there are select ecosystems that are showing strength. So Avalanche is one, and Atom has really woken up, or the Cosmos ecosystem, not Atom itself, even though it's up 20% today. But the trade that I'm kind of clocking right now that I'm interested in was AVAX, Joe, and this asset called Key. So Joe pushed all the way up, like it's done a monster run. It went up to like 45 yesterday. You can log into Token Terminal. It's a free kind of like on-chain sort of platform where you can look at protocol revenue, supply side fees, fee revenue, daily active users, wallets, volumes. It's quite dynamic. So what we saw happen with the Solana ecosystem, basically Avalanche is an analog to that in terms of activity, volumes, TVL rising, assets, low cap assets and larger cap assets within that ecosystem, ripping and running. So Joe, I'll say something about that token, even though I don't think it's a good trade right now. It reached its supply cap of 500 million tokens, and emissions have stopped, and incentives have been paused. So that seems to be a theme of this cycle, that DeFi projects and altcoins either want no emissions or to be low inflation or supply capped, so that they don't have the issue of mercenary capital and farmers coming to their platforms and boosting their TVL, taking the native token emissions, dumping them on the market, hurting the actual asset price. That seems to be a theme of this cycle. More and more protocols are coming out and talking about that. So the token that, to get to it, the token that I am looking at the moment is called Key. And let me see if I can find it. The impact of having all these tabs open, as you pointed out, Marconi, is with the VTuber on. Actually, my computer is running slow now.
Oh.
Usually it runs like a champ, and I can have like 75
reach
tabs
max
on,
capacity.
and it's never an issue.
I
I
figured
might have reached max capacity.
I was going to say, I thought it was Senator Warren trying to come in and stop you from trading because she was worried about your activity.
Could be that, but I found some really good VPNs that Congress cannot touch. So we'll leave it at that.
Yeah. So anyway, so just to summarize this, Ray. So just to kind of TLDR it, you just mentioned Joe, then you mentioned Key. With the factors we just talked about, kind of being a chop period. What's your time frame here? Is this something you're looking at over the next couple of weeks? Is this something even today that you're saying, hey, this may be something to pull the trigger? What's your time frame on that?
I'd say 3 to 6 months, because
that far out. Okay.
Yeah, I'd say 3 to 6 months. That way you don't pin yourself to the wall on anything, because price action can be so volatile. So with the expectation of the halving coming, with there being a bull market, with an ETF being approved, that's just liquidity begats liquidity, right? So if Bitcoin becomes more liquid and inflows are coming into this market, altcoins just are going to go up regardless, right? And the reasons why they go up are going to vary. So without pinpointing a particular asset, I would say the trade right now, as Bitcoin consolidates and pushes higher, the trade right now is narrative rotations, capital rotations, and airdrop volumes. So look at the ecosystems that are showing asymmetrical price moves to the wider altcoin market. Right now, that's Cosmos and Avalanche and Solana, and dig into why are assets within that ecosystem moving. So those are going to be TIA, Celestia, right? Celestia TIA, which was an airdrop, and that's a Cosmos asset. Right now, every protocol in Cosmos is asking people to stake TIA and providing incentives for it so that they themselves can do airdrops, right? So there's going to be a lot of airdrops that happen in the Cosmos ecosystem simply because of the TIA incentives. And TIA is showing incredible strength right now. I think it's trading at like $12. So it just continues to go up, 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 right? JTO, that's a Solana token. They did the massive $25,000 to $300,000 airdrop to 10,000 people that interacted with the protocol last week. They're probably going to do the same thing where staking that token in various Solana DeFi protocols is going to beget more airdrops. And then, separately from Avalanche and Cosmos, separately from Solana and Cosmos, the same kind of capital rotation and narrative rotation and airdrop chasing is happening in AVAX. And AVAX is kind of meant to be the nexus of online gaming and online gambling. And Key is doing this thing, Chi, through this platform called Binki, forgive my pronunciation, where they discount the cost of running a validator. Because right now, if you want to run a subnet, you need like 2,000 Ethereum, AVAX, which is like 300K, right? So you can do it for a fraction of the cost by renting a subnet if you pay with Chi token, right? So there's a whole flywheel going on there, and that token's up like 300% in the last 2 weeks. So, what you want to see is kind of like volumes increasing, subnet use increasing, new subnets opening, subnet rentals going up, AVAX price continuing to rise, AVAX TVL, ecosystem TVL continuing to rise. All these things that are a sign of ecosystem health, more people opening wallets, wallet balances going up, volumes going up. If you see that happening within the Avalanche ecosystem and subnets are growing and there's all this jibber jabber about blockchain-based gaming within the AVAX ecosystem, then these are the kind of like factors that back what might be a good fundamental trade. So to summarize, the best trade right now as Bitcoin consolidates and even pushes higher is to look for asymmetrical ecosystem performers within the altcoin market and figure out, why are these things moving? Is it because of airdrops, or is it because of developer incentives or other factors?
Okay. So what I'm hearing from both you guys is that there's no reason to rush in. We've got time. You're talking, Ray, about moving out for 3 to 6 months. JJ, you're saying, even in the next couple of weeks, you may see some signals coming in from Dixie, coming in from the rest of the market that suggest we actually are, that 40K may start to actually prove to be some resistance, or rather some support that could help with the further leg up. And we'll start to see that over the next couple of weeks. And for all those listeners who are out there asking, well, how are we going to know? Well, I'll tell you what, we're going to be back on Thursday and then coming the following week with the Trading Pit. So I suggest you like and subscribe to the channel so you can join these live sessions where we're going to be sharing this data again. And we'll continue to come back to some of these trades, sort of see if we're still holding the same opinion. But with that, I think we're about ready to wrap up the show. So we have a good idea where the market is. It's a good time not to be serving as exit liquidity. But as we have done in the past on our previous, or rather other episode, the Alpha Bytes, I want to ask you guys and do a little bit of a roast, since we've got the FOMC meeting coming up and we've got Papa Powell who's going to be sharing his thoughts on the market. So Ben Lilly has a suggestion here. He likes to jump in behind the scenes and rap with the producer. He wants us to answer the question, what do you say near the coffee pot with Jay Powell just before he goes onto the podium to share the information? What are your thoughts here? What are you going to say to Papa Powell?
Ray, you got anything?
Oh, man. I guess here
like
comes
deep
30
thought.
minutes of irrelevance.
Oh, ouch.
Yeah. Yeah, because we spent all this time the last year glued to FOMC and interest rate talks to see if he was dovish or hawkish. And to me, it's now irrelevant. So the jig is up when it comes to terminal rates, and the jig is up when it comes to the ETF and the bull market and everything. So Papa Powell has become semi-irrelevant to me. Dow and SPX are in a bull market, and the employment market's still strong. So maybe he's been irrelevant this whole time, but he's definitely swinging less weight this time. So Bitcoin doesn't care.
You're putting Papa Powell out to pasture. How many more P's can I put in that sentence?
Out to pasture. That's right. Yeah, Trump's going to retire him. He's going to be the scapegoat.
now Ray's really playing the speculative markets there. JJ, what do you think?
I'm just hoping Christmas come early, so hopefully he just confirms the market's expectation here on rate cuts and gives us a nice blow off top for the end of the year.
This is what you say. You've got 30 seconds next to the coffee pot, his favorite thing to drink in the world, and that's what you're going to say?
I have to trade the macro. Unfortunately, it's kind of the basis of my framework here, so I'm at his mercy. So
you're at his mercy. Okay.
Yeah.
Well,
I mean, if I could, I'd have quite a few explicitives to add in there, but I'm at his mercy. I need it to be nice to us.
All right. Okay. Well, with that, now I guess I want to know from everyone who's out there listening, what would you say to Papa Powell if you were at the coffee station right before he was about to take the stage? All right. Well, with that, we're going to wrap up this episode of the Trading Pit. I want to thank Ray. I want to thank JJ for being on here and sharing both the information as well as their insights into the market. Again, if you like this show, if you enjoyed hearing what these guys had to say, like and subscribe, share it with other traders who are out there. This show is for you, and we want you to get the most out of it. You can drop more comments below and let us know what other topics you think we should cover. But with that, we're going to wrap it up. So just to summarize here, make sure you stay safe out there. It's a crazy market. Don't get chopped up. Do not be exit liquidity. If there's one thing we're going to teach you here, it's going to be that. And with that, we'll see you on the next show.